So let's just pull up the dollar for a second. So if we're talking about inflation, let's just say inflation in general, okay? So the current environment, right? Current environment is that inflation is coming down, okay? And let's just say that our target, we're getting pretty close to our target, okay? This blue line is our target of about 2% annual inflation. That's what the Fed wants to see. Why do they want 2%? Why not 0%? Why don't they want to see prices go down? Well, because prices going down are usually in response. I'm double checking that there's not water leaking into my, my cat is staring at the floor. So I'm like, please don't be staring at water. Anyways, so why do they want 2% inflation? Well, 2% inflation signals that there is growth in the economy, because if you have 0% inflation or negative inflation, deflation, what that tells you is that nobody's going out and buying anything. Like the economy is completely at a standstill, which is extremely negative. So we don't want that, right? We don't want incredibly negative inflation. We don't want incredibly high inflation. We want somewhere in the middle, or 2%. So that's why the Fed targets 2%. How do they do that? How do they target inflation? Well, they raise and lower the cost of borrowing money, or interest rates. And so we've had a period of higher than usual interest rates, or higher than, the last 2 decades or so. And now we're seeing inflation coming down. So the Fed is cutting rates. They cut rates last week. And yeah, so we're seeing Fed rate cuts begin to sort of combat that. Now, what you don't want to see, however, is the Fed begin to cut rates, and what worst case scenario happens, inflation actually bottoms out and starts going up again. Now, is this possible? Yes. But is it likely right now? No. So when we know that the unlikely scenario is a rise in inflation, the market, what that tells you is the market doesn't expect that to happen and is positioned for inflation currently to do what? The market expects inflation to come nicely down and sit around 2%. So if inflation does this today, meaning if we see more evidence of inflation just normalizing to 2%, the market already expected that. So likely what would happen is not a whole lot, right? Because that's what the market currently expects. You always have to be thinking, what is the market thinking and expecting right now? And what could surprise the market? Well, today, what could surprise the market, not something I'm forecasting, but could be worth noting, is a uptick in inflation could disrupt the good vibes story that we've had the last few months, meaning stocks go higher and et cetera. If you get a disruption to that story, meaning inflation does not come in line or does not cool off further, then you might have a little bit of a mini panic in the market. So when I talk about inflation, sorry, let me fix my camera. Hold on.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
There you go, kind of. Now I'll just have to stay back here. So if we get inflation surprising us in a negative way, then the market's going to have a big movement. So don't expect a big movement if we get inflation coming down further from here. I don't think that's going to really do much to the markets. If, however, you get a surprise, stocks would probably come down, bonds would come down, gold and silver would also come down because higher inflation would lead the Fed to not cut rates as much. So that's what's on the table here today. We're watching inflation. What would go up in that environment? If you get a resurgence in inflation, which is unlikely, but worth discussing in case it does happen, the dollar would go up. right? Like in 2022, when the dollar went straight up for like a whole year because inflation kept going up and up and up. Excuse me. So that's the point that I want to talk about. So with just a few minutes to go with the PCE number coming out, what can we expect? Well, we are currently forecasting. Let's see what we've got here. We're forecasting for the month over month. In fact, what I'm going to do is I'm going to go ahead and pull up FX Street. Sorry, guys. I ate breakfast right before this, so I'm still, yeah. Okay, so let's go to economic calendar and let's just pull up what we've got coming. By the way, there's 458 people here watching between Twitter and YouTube. If you're enjoying the show, these are totally free. I do them every single day. I'm pretty much on camera every day of the week, just about. And if you enjoy the content that we're putting out, do me a big favor, hit the thumbs up button on the stream, subscribe if you're new, all the YouTube stuff. If you're on Twitter, make sure to follow wherever you're watching from. I appreciate it a lot. Thank you so much. Okay, so I'm going to do this really quick. We're going to go to, let's make sure we're on the right time zone. So we're going to go Eastern Standard Time. So we've got PCE. We're looking for core PCE, personal consumption expenditures, year over year. So this is the number we're watching. Okay. So we're expecting 2.7. So if we get 2.7 or 2.6, it's kind of business as usual. Meaning, what has business been up to recently? Well, gold up, silver up, stocks up, bonds up on falling inflation. So that's what we're looking for, right? We're looking for that number. But what disrupts that? What disrupts that would be a higher than expected reading, meaning if we got like 2.8 or 2.9, if you got a surprise to the upside in inflation, it probably slows expectations for rate cuts. Remember, rate cuts spur the economy. They weaken the dollar. It's good for gold, good for stocks, good for bonds. All right. If you get a disruption to the course of action there, meaning inflation is strong or high, that could be not as great situation. Now, one thing helping the inflation story recently has been the big drop off in oil prices. Remember, inflation can be, I don't know if this is the right vocab word, exonerated? I don't think that's right. Expedited? I'm grasping for something here. Somebody give me a word. Inflation can be, bolstered, increased if oil prices are rising, right? If there's a rise in the cost of fuel and energy, which everything costs, every product that you and I purchase to some degree has impact from the energy sector. If energy prices go up, the rest of prices will go up eventually as well. Okay, so PCE numbers came in 2.7 compared to consensus. This is the exact same. Month over month came in 0.1 compared to forecasted 0.2. We do see, let me just fix my tabs here. We do see so far S&P 500 up a little bit, NASDAQ up a little bit, Dow Jones up a little bit. Russell is up on that 0.6% or so. You got the Nikkei, by the way, down 4% this morning. China's up another 2%. The VIX is lower here this morning. Dollar index looking like it wants to take out these lows. Again, inflation continuing to cool, as we kind of talked about. That's the expected. The expectation was more cooling for inflation. So dollar just sort of rolling over and continuing its downtrend. For those of you watching the dollar index, keep a tab on this for a second with me. If I would be very curious to see if we get a break through these lows, guys. If you get a break underneath, let's call it let's give a number to it. Let's see, 100.25, let's call it. If you get a break underneath that, then you've got some interesting potential that the dollar could just continue to slide lower and lower. The trend is your friend here. And if you're against it, it's been a rough one. If you've been buying the dollar this year, it's been a really rough year. Dollar index has been very, very weak. And this is the year for metals, right? We've talked about that quite a bit. I am long silver. This is a current position for me. In fact, we'll pull up, let's just pull up, see where the silver position's at. Silver position, I'm just going to filter it here so I can see it a little better. Let's go just ETFs. Silver position is the only current position I have on the momentum side of things. We're looking pretty good, up about just under 13,000 on that position. Silver's up 0.14%. Gold also continuing to trend up. I like the metals long. I'm still long on them, or on silver. I do like silver more than gold at this time, but that could change. So let's see, let's double back and take another quick look. We've got S&P 500 up about 0.15%. Not a huge movement there. A little bit of a bounce back from yesterday's mini drop. Indices have been kind of range bound for the last few days. Here's a look at the Dow Jones on a 4-hour chart. NASDAQ continuing to trend nicely to the upside, looking strong. The indices look very, very good. I am looking for a chance to buy on dips, but there just hasn't been a lot of dips available recently. So on the silver side of things, I am staying long. That's a trade that I'm currently looking at or currently managing. So I've got my stop loss trailed on this. And by the way, this was all shared inside of our VIP room. If you're not in the Discord, we'll drop a link here in the chat to where you can speak directly to a member of our team and get access to our trading signals. Yes, we do offer trading signals, but more importantly than just offering trading signals, sometimes you get dabbed on for like, oh, he sells signals. Well, I pull it up all the time, and I do this not to be arrogant or anything, but the truth is, if you're going to pay for signal services, you better know that the people that you're watching are actually trading live brokerage accounts. Well, if you want to be a bull on the dollar right now, we need to see some more decisive economic data changing. So for example, okay, here's case study number one. Yesterday, we got GDP numbers that came in line with expectations. If you're a dollar bull, you wanted a blue chart. You wanted a blue GDP graph to pop up into your edge finder to say, okay, GDP numbers beaten expectations. That's strong for the US dollar. We also want to see services PMI come in better than expected. Last time around, we didn't really get a big beat there. In fact, the one time before we got a miss. Manufacturing in the US, you want to see some upbeat numbers, not quite getting that. We're still below 50, which shows contraction in manufacturing. What about retail sales? Retail sales data points, they came in a little bit better than expected. So there's something for the dollar bulls. But here's the big one. You want to see jobs data. You want to see it coming in better than expected. Okay. You want to see jobs added in the US being rock star. You want to see this environment where jobs data was beating expectations for a while there and looked very strong for the dollar. Again, if you're a dollar bull, these are the signals you want to be looking for in the economic data to make a decision that, okay, maybe the dollar is actually going to show signs of strengthening from here. So something to think about. Harry says A1 Trading website has loads of free education. Yes, we don't sell courses. A1 Trading, we don't have a course for sale. It is all available for free on our website. There should be a cost to them. They're that quality. We worked very, it's a lot of work to put together a course material, and we put it for free on our website. Now, we're not saints for doing that. We'll probably collect your email at some point. We'll probably market our tools to you at some point, but the course itself is genuinely free. So head over to a1trading.com. We have several courses available for free that my team and I have put together. But yes, there's no catches there. You can genuinely, we don't sell a course. We do sell software. We're a software company. That's why I'm showing you the software right now, but I do genuinely use it, and many traders around the world do as well, to get a better idea of what the fundamental data is actually looking like. So let's continue the story. If you are somebody looking for the bottom on the dollar index, where can we find it? It's not on the technical chart. In my opinion, it's in the fundamental data. Okay, we want to see upbeat jobs data. That would be a surprise to the upside for the dollar. Could be a strengthening factor there. Unemployment claims, we want to see unemployment claims actually continue to trend lower, which we've started to see some, right? You want to see people claiming unemployment at a lower rate. Something to think about there. The PCE numbers coming in light again here this morning. What are your thoughts? Are you watching the dollar? Do you have any trades on right now?
Yes. I wasn't expecting that to be as cool as this. I wasn't expecting a negative number or a quite lower number. But yeah, it's good because it's happening now. So which means I was bullish already on Nasdaq and other pairs. So this actually confirms with us that yeah, we actually on that lower inflation. So I think Federal Reserve, they don't really have any choice but to keep cutting the rates. So yeah, I'm expecting to see some very nice moves here on the dollar index. I think we will see maybe a continuation of that downtrend, which at the end of the day, that will be a good thing for us to keep buying on Nasdaq and other pairs.
Okay, yeah, fair enough. I think that it's kind of just keep it simple, right? The stock market wants to see rate cuts. Seems like more evidence for more rate cuts is in the picture with cooler inflation numbers. It could just kind of continue the upward drift, if you will. So show me. I'm just curious in terms of the Nasdaq, the S&P, the Dow, whichever ones you want to look at. How are you looking to play them? Do you have positions open? And another question for you: if you didn't have positions open, what would you be looking for in order to enter trades on NASDAQ, S&P, Dow, etc.?
Currently, as we have lower rates, I will mostly focus on Nasdaq's, not really US 30. I think US 30 because it doesn't really have much of tech companies, and at the moment, once the rates are lower, they tend to perform very nice. But US 30 mostly once the rates are going down because they have banks on US 30, they tend not to perform not really that good. So mostly it will go slower. So on the tech, actually, I will be just focusing on actually a bounce back. I think we're coming from a very nice aggressive sell. That can also be a very nice thing for me to say we need to go higher. Plus, we are going towards the end of the year. So I think people are going to spend more. They are going to buy new iPhones and stuff, or let's say tech. And some they are going to vacations, so which means they are going to use a lot of tech. They're going to have meetings on Zoom. That is going to boost most of the companies that we have on Nasdaq. So one way or another, I think we're gonna end this year going up. Another thing, it might be maybe elections. Maybe that might be something that we will. I will have to actually look closer because sometimes the market might panic and might not really react the way we want until maybe we have the president. But for now, I think I'm actually bullish, like seriously bullish.
Yeah, no, I mean, I don't blame you at all. I am having some FOMO myself, Kenzo. I wish I was in more technology names right now. That being said, I think that if we've done this many times together. We've discussed this concept, but I just want to say for myself and maybe for others in the audience who are feeling the effects of FOMO right now, you have to stay patient because here's the thing. There are times when I come on these live streams, Kenzo, and I've got a big trade running and it's awesome. And I'm, telling everybody else, oh, just be patient and wait. And it's a lot easier when you are in the trade to say, wait for the trade. I personally am not in the NASDAQ or the S&P. I really wish I was. And all I can do, and for people listening in the audience with these sorts of FOMO moves, is be patient, wait for the market to set up for you. There's no point in making any sort of quick decisions or rash decisions. And at some point, these things will pull back. And if you're bullish, you might get a chance to get them. But if you don't, there's no, it's not a very intelligent thing to chase.
This month has been possibly, in fact, it is the best trading month I've had this year, which is great. So as I did on Wednesday, I'll prove it. So again, for anyone that watches my segments on TradingX show frequently, you'll probably have heard me saying I was moving money over to a MetaTrader account because I wanted to have my FX book. Because I sell a service, and as Nick says, I think it's only fair to be able to prove that you actually do what you do. Now, there isn't much data here. As I said, it's still new. So this is the original account that I was trading throughout September. This one is up 4.1%. So you can see a 60% win rate. There's quite a lot of trades, but I do a lot of hedging and a lot of scaling in as well. And then there is a new one. I had to make a new one because I've started doing some account management and things. So I needed to get a PAM account. So in the last 2 days, this one's up 2% as well. So overall, for September, I'm up roughly 6%, which I wouldn't say is a bad performance at all. So one of the best trades is pound yen. Now this was, probably one of the best trades I've had in a while, and not because of the return or anything. I mean, 3% is good, but it was the exit point and the management. So what I'm going to do here is show you what happened. So obviously the trade was sent, we moved our stops to break even, and we had a pretty large daily level, which was here. So I was saying, basically, we need to be very careful. So we moved our stops to break even, anticipating a rejection off this level and basically a push to the downside. And that obviously would have taken us out at break even, mitigating risk. However, if we did see the break above this level, I was looking for the next level of structure, which was through here at 19591. So again, I'll show you that just to prove it, because I know people are very skeptical, as they should be. So you can see here on the 26th, so yesterday, I said I was going to extend my take profit, and you can see how that ended up very, very well here. So this is just following essentially what I've been saying to you guys for the past week, maybe 2 weeks, is the Bank of England held their rates at 5%. The Bank of Japan sounded dovish, essentially saying they're not in any rush to be hiking rates. So already we had a central bank divergence. So knowing that, I was looking to go into long positions. So I couldn't get into anything on higher timeframes. There was nothing here on the daily or even the H4 really for me to get into. So I had to go down onto the H1, which I don't do very often. But I was very determined to get into this trade. So I just implemented exactly the same technical entry model, I guess you'll call it, as I always do. So all we did was find this level of structure, draw the fib from the low to the high, enter off this 50%. So you can see on this bullish, I'm not sure what the candle names are, but after this bullish candle, we had close off 50%. I entered, had some drawdown, and then slowly trickled to the upside. But anyway, we can cover some markets. I know you guys probably aren't too interested in this stuff here. As for open positions, I am in pound yen long again, and it's basically the same reasons. So on this one, this is an intraday position. So I have two trading styles. I have an intraday method, which is essentially just technicals with very light economic biases. And then I have a swing trading strategy that is essentially just fundamental. So on this one, it's exactly the same. Bank of England is relatively hawkish. It doesn't seem like they're going to be cutting rates soon. And if they do, then it'll be more likely due to some negative data we start getting. But at the moment, Bank of England seems relatively stable. And we also do have this large move on the yen that I view needs to be filled in or corrected. We also have the pivot point here, which is S3, being tapped and rejected. So S3 has a 94% chance of basically the price closing back inside or back above S3. So basically just playing statistics here. So very simple stuff. We are also in silver. So we actually got a worse entry than Nick, which I'm a little bit jealous of, but same idea really. And we've reduced our target to $33. So yeah, this one should ideally be hitting take profits soon. Just going for just under a 1 to 2 here. So that's it really. Portfolio is quite quiet as we head into the end of the month. So we can cover gold. I think Nick already spoke about gold, but yeah, there's really nothing going on. You can see I am looking for pullbacks here, but so far there's just nothing. Gold's on a rocket ship to the moon. And if it doesn't have all the passengers, it doesn't seem to care, which is fine. So all we really need to do is just wait, and we can try and find something or somewhat of some sort of pullback here, whether it's to this sort of minor level of resistance that we had, or the more major level down here when we were creating new all-time highs. I don't know. Unfortunately, I can't predict that. Yeah, it's a case of just sitting and waiting. I am still in favor of the 3,000 level getting hit. Let me mark that up actually here. So 3,000 is the long-term target I've got. In terms of the time frame for this, I've got no idea. I couldn't tell you whether it's 6 months, a year, 2 years. I'm not sure. But eventually, I am looking for this 3,000 targets. And if we can get the pullback, I will look for a take profits at 3,000 and just trail stop slowly until we get there. So essentially more looking for a position trade on gold rather than a swing trade. So yeah, we'll see. But for now, there's nothing we can do. Angus, hello, good to see you. Let's have a look at some of the indices. What's going on here? Yeah, it's kind of difficult, really. It's very similar to gold, nothing going on. FTSE, again, going to prove what I've been saying. It's just one of the worst indices, if not the worst. Yeah, I feel sorry for anyone that's invested in this or trying to trade it. So for the last, when was this? 24th of May. So yeah, for quite a long time, FTSE's just been stuck in a disgusting range. And it's on the H4 as well. This isn't necessarily a low time frame. So yeah, it'll be very hard to trade the FTSE. The NASDAQ seems to be heading to the upside quite nicely. But again, in terms of entries, there's nothing here that interests me. The Nikkei, interesting. So we didn't seem to get the break in the retest. We seem to have broken and failed to hold above. I'm not looking to buy the Nikkei. It's more just, keeping an eye on it. That's how it works. Good CT. Market's pretty quiet today, setups wise. Yes, it is. I've been a lot more focused on day trading recently, actually, which I think is why I've had such a great month. Just because the markets are quite aggressive. I mean, it's dollar bearish, yen was bearish, now it's yen was bullish, then turned bearish, and now it looks like it might be turning bullish again. The euro's been pretty stable to the upside, so is the pound. But the problem with trying to get into swing trades at the moment is everything's very extended. So if you look at any of the indices, gold, silver, copper, so yeah, day trading was kind of the way forwards for me this month. It was kind of the only method I could come up with to make some money.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.